And good morning, everybody. Welcome back to another edition of the Empower Hour, where we strive to go ahead and bring incredible information from top producers across family first life to go ahead and empower you, the agent, to assist you in taking your business to the next level. And today I'm extremely excited. I've been looking forward to this for, man, about a week and a half. This young gentleman here is a powerhouse in the index universal life space. And if you're looking to introduce this into your business to go ahead and assist your clients in reaching their financial goals and protecting them as well, their family from the loss when they pass with the power of insurance, this is the gentleman, this is the hour that you want to take incredible notes, because we have the top producer in all of Tri-State, the number one, numero uno index universal life producer in 2023, Mr. Yanic Santos, Yanic, excuse me, Santos from Unique Financial. Yanic, how you doing, brother?
Doing awesome, awesome. I'm happy to be here.
Good, man. We're excited to have you on,
Yeah.
and I can't wait to jot down all of these incredible golden nuggets that you're about to throw down on in this Empower Hour. But Yannick, you were on last week. You kind of know how we like to start this out, man. We like to get to know the producer a little bit more on an intimate level. So if you would just go ahead and, I know that you're a family man, you're married, you got a baby, but tell us a little bit about yourself prior to insurance, and what it is that you're passionate about outside of the index universal life space.
Awesome, awesome. Well, thank you. It's an honor to be here on this platform. I always see the flyers coming up, and I always looked at you actually as a mentor. You didn't know that, but you are.
Well, thank you. Honor.
And on that same note, I remember seeing me and my wife, seeing you and your wife on the cruise ship.
Yeah.
And I told my wife, that's Shannon right there. That's Shannon.
That's awesome. That's the old man right over there.
No, no, not at all. But anyways, it's a pleasure to be able to continue sharing my passion, which is insurance as of now. But before insurance, who was I? Well, I was a young little kid born in West Africa, and had this huge passion for soccer. My goal was to become a professional soccer player, which it was going really good the first magical 15, 16 years of age. Got drafted, went to Europe, played a little bit there, and then my career ended, and went back to Africa and told my parents that I wanted to come to the land of opportunity, which is United States. And as soon as I turned 18, they allowed me to leave the house. So I came and started my journey in New York. And yeah, out of all places, I landed in New York. Yeah. Not a good idea if this is going to be your first rodeo in the fast-paced life. But starting my career here, I was a construction worker. That was the first job that I got, and moved up and became a painter, and then got fed up with the industry, went to the restaurant business. I got in as a dishwasher and became a server. And from there, continued to get odd jobs. And one day, a friend of mine introduced me to another friend, and that friend took me out on I want to say, well, job interview, if you may, because back then we're looking at, it's still in the 90s. He showed me the ropes of what it was like to actually go visit people in their homes and sell insurance in their homes. And I was so confused, so confused. We got back to his car, and he asked me the, magical question. So what did you think? I'm like, I don't know. I'm not sure. Do you sell insurance? Is that what it was? And he said, yes. And you know what the best part is? I said, no. I just made $2,500. And of course, I was,
Jaw dropper.
yeah, I was like, no, there's no way. There's no way. Show me. and he proceeded showing me, and of course I was hooked as a young teenager. So I proceeded asking him, what do I need to do? And he said, well, you got to get your license. I was like, no problem. Pull out my driver's license. I got it. Yeah, and he's like, no, you need an insurance license. And so, yeah, I started the career from there. And 20 something years later, here we are.
Man, that's awesome. What part of New York were you in?
In Brooklyn.
Oh, that's where I live, dude. I started in New York City. I lived there for 10 years.
Oh,
And
really?
yeah, so I was in Carroll Gardens. I was in Bensonhurst.
Oh, my.
Yeah, I love Brooklyn, man. What part were you in?
I was on the north side of it, close to Flatbush, but
Flatbush?
Wilson Avenue, Wilson Avenue there.
Okay, gotcha.
The L train, the great
Yeah,
L train.
I love Brooklyn, man. I love it. But now you're down in Florida, right?
Yes.
In Miami?
Orlando, Florida, Mickey Mouse.
Orlando, Mickey Mouse. Mickey Mouse, my very first client that I sold my very first policy to the day before my first convention, right? I
Wow.
walked into the house, Yanni, and there's all of this Mickey Mouse paraphernalia. And so I'm looking around, and the gentleman's sitting down on the sofa, and the wife had answered the door, and I look at him, and I said, "So who's the big Mickey Mouse fan?" And I looked right at her, and she pointed back at him. He loved Mickey Mouse, man.
Hey,
Yeah, and he's still kicking. He's in his mid-80s now. He's still kicking.
that's
And
awesome.
so, anyways, Orlando's awesome, man. So you got married. When did you? How did you meet your wife, and when did you get married?
Well, I wasn't planning on getting married. It was something that just happened
Okay.
to a certain extent, but I had always had ambition, right? So one day I walked into a financial institution. I was there to get a check, and my wife happened to be one of the managers there. And we locked eyes, and yeah, first date. And next thing, 6 months later, I was on my knees.
Wow, boom, man. That's awesome. That is awesome. And your wife's name?
Nada,
Nada. I
yes.
saw it on Facebook. I didn't know how to pronounce her name, and I didn't want to screw it up.
That was
Nada.
fun. That was fun.
Yeah. Hey, man, I learned a lot my first marriage. I don't make mistakes like that anymore. And and you have a young son.
Yeah, I have three children. I have a
Three.
yes, I have a 20-year-old, I have an 8-year-old, and I have a 2-year-old.
Wow, that's a good spread.
Yeah, yeah,
That's a good spread. 28 and 2. That's
yes.
all. And boys, girls.
I have two boys, the older ones, and I have a little princess, the 2-year-old.
Uh-oh.
She rules the house, rules the
She's in
house.
the house. You got troubles, my friend. That's why you sell so much. So you obviously I can tell you're a family man. You've got a big, strong why. I'm sure that your family is a huge driver of that. And so it's an honor to have you on, Yanic. It's always nice to get to know, the individual, right, on a personal level, and get to know a little bit about their story. So thanks for sharing that, man.
Absolutely.
And like I said, I don't stroke anybody's ego at all, right? But you're an incredible producer, man. You've got a strong social media presence. You're educating the public, right? And I love that because when you bring value to the masses, you can't help but have success, right? And where do you think that drive to educate, it's not just a marketing ploy for you? I just know it's not, right? Where does that drive come from, wanting to educate the public on finances?
That's a great question. I would have to say that it comes from first me being the person. I'm always a giver. I've always been a giver. But if I didn't do insurance, I would have to be some type of a teacher because it comes natural to me. But the reason why I love to share in our industry is because I fell in love with it. I am completely in love with insurance because of the impact that we have and seeing the light up in people's eyes, both agents and clients. Uh, I've thought about it many times. Who do I like to educate more, agents or clients? It's to me, it's 50-50. So it's the passion. It's the passion for me.
Yeah, that's awesome, man. And so 20 plus years in the business, right? You did you start out like with final expense, you gravitate into other areas? Tell me a little bit about that.
Yeah, I started in the final expense in the 90s, and my first 5 years was just final expense, final expense. To me, that was insurance. I didn't know anything else. And then later on, I stumbled upon term insurance, confused me because I had no idea that we had the other spectrum there. And then further into my career, I got introduced to IUL and completely blew me away. And now, of course, I thought we were invincible because we had the whole complete menu. Little did I know that there was other products out there left for me to learn, and eventually I got into a little deeper the premium financing, the infinite banking, the annuities, the IRAs, and so on.
Right.
Yeah.
And what is your approach with a client now when you well, number one, are you doing more in-home or are you doing telesales?
Well, before COVID, it was in home. After
Mhm.
COVID, like everyone else, I had to adapt. It was so uncomfortable. I thought it was not going to work, like many of us colleagues here. And now, basically, I would say 90+% of the time, I'm in front of a computer doing a Zoom with my clients. And the approach is very simple. It's how can I help you?
Mhm.
And you pry that out from them, and you watch what you say, of course. And there's a timing for everything, and you have to listen. It's important to listen, take notes. After a while, it gets automatic. It becomes automatic. But for me, of course, I've made all the mistakes that you can possibly make. I've hit my face on the wall so many times over and over again. And the one thing that I didn't do was I never quit.
There you go.
Got hard many times, many, many times. Yeah.
There you go. Grit is necessary in this business, right? And it's never a failure, when like when you screw up, man. As long as you're learning from it, you say, all right, where did I go wrong there? What can I do next time to help the next person? Right. Now, so you're absolutely right. You got to listen more than you speak. And so you're uncovering the need, right, first, but there's also the medical side of things, right? We have to make sure that we're on point with our underwriting, especially when it comes to products such as IUL, which do mirror for the most part, term, right? It's a tougher underwriting. And so I would imagine, you're not just blurting out, hey, I got this great new product. It's called an index universal life. You're not saying that, are you?
No, not at all.
No. So
No.
tell us a little bit about your approach when you do the medical, and how is it that you're pivoting to the appropriate product? Are you talking like strategy prior to discussing the product, meaning like explaining what a smaller policy can do for them if they're trying to protect the mortgage or what have you?
Yeah. Of course, as you all know, there's different parts to your presentation. And as sometimes there's agents that are so eager to get into the sale or closer to the sale, if I may. And I'm speaking about the mistakes that I have made as well, of course. But my first part of my presentation is I'm trying to pry two things that are crucial for the rest of your presentation. This is how you position yourself. At least this is what I do. You have to get first the likability from the client that you're speaking with. And for them to actually like you, you guys have to find some type of common ground, something that connects or makes sense. And then sometimes it entails you becoming vulnerable with them to a certain degree. Once you achieve that, then now you have the opportunity now to earn their trust. And the way you're going to earn their trust is through conversation. They can hear in the first minute or so if it's worth continue to having the conversation with you. Once I achieve those two first things in the beginning, then we start talking about why we're on the conversation in the first place, right? And that's when I ask them, you know, I transition from getting the likability and the trust into, so how can I help you? It's like a hot potato. I basically put that on their lap. Keep the conversation as pleasant as possible because it's already a tough conversation to be in. You know, you think the agent is nervous. You know, oh my God, what if they ask me this or that question? Put yourself in the client's shoes.
Mm-hmm.
They're thinking, oh my God, I'm finally having that uncomfortable conversation, right? Number one. And then second, they're also thinking, oh my God, is this going to cost me an arm and a leg? What do I have to give up? This infinite amount of things that is going on the client's head that's making them tense to have the conversation with you in the first place. So your job as an agent is to make that conversation as pleasant, as fun as possible.
That's right.
Yeah. Of course, there's three ways to approach it. You can approach the conversation from a scare tactic approach, or you can approach the conversation from a, you know, lack of, you know, you need to get this or you're going to be in trouble, or you can approach it from a pleasant standpoint. And for the most part, now I tend to choose the pleasant standpoint.
So much better.
You have so much more fun.
It is. It is. You know, because when you approach it like that and you acknowledge, you know, what's going on in the client's mind, we already know.
Yes.
Right? It's not a pleasant conversation. And if you address it and you say, hey, Yanic, I know this conversation's not pleasant, but the good news is we only have to have this conversation once. Right? Mm-hmm. And then they're like, wow, okay, cool. That's awesome, man. Thank you so much.
That's it. That's it.
And then when you say, hey, my job's super simple, man, and you go into whatever it is, how you explain your process, whatever that is for you, it's so huge. Now, of course, this is on Index Universal Life, and that approach has definitely bode well for you because you were the number one producer in IULs for Tri-State. Huge accomplishment, man. And there's such a big push for the SRS team, Simple Retirement Solutions, through the use of annuities and IULs. Specifically today, we're going to focus on the IULs because you have a lot of knowledge we need to unpack on another, probably two more calls, right, with you. And like the annuities and infinite banking and such. But with the IULs, once they qualify, right, like, what advice would you give, number one, because we have a lot of new agents on this call. And by the way, this is, we've got 45 folks on here this morning, which is the most we've had yet. So thank you, sir, because everybody wants to learn about these IULs. And they're newer. And even for veterans that want to get into the space that are just doing, I was talking to some agents the other day. They're like, man, I'm a final expense guy, and I'm now getting into IULs, right? So we got some veterans that are breaking into it for the first time too. How would you approach it? Which products would you recommend? Because we've got simple products like MU IULE, we've got the new Ethos, right? And then, of course, I know that NLG is probably a favorite of yours, as well as maybe F&G, which are a little bit more advanced in the quotes are a little more complicated, right? As far as the illustrations, right? what would you recommend that someone breaking into it, where should they start? And any videos, anything else like that, as far as maybe the boot camp that we have, with SRS or anybody else on YouTube that you would recommend listening to?
Okay, that's I see several parts to that question.
Yep.
So, I mean, first, let me say, if you're going to use a carrier for IUL as a new agent, I haven't seen an easier platform than Ethos. Ethos
Yep.
by far is just, you can pretty much do it with your eyes closed. And I just became familiar with Ethos. All the years in that space, the IUL space. You have to take your hat off to Ethos for what they have accomplished. So if you're a new agent, dive into Ethos. It's going to help you tremendously, because there's other parts involving selling an IUL, if you may. So you want to keep, it as simple as you can, especially in the beginning. Are you doing your client a disservice by selling them a Ethos IUL? Absolutely not. It's a great product. What I think Ethos is going to do with time is they're going to become better and better and better. They're going to tweak it until they are up there with the big boys. Now, Moo, I've sold Moo before. IULs is different. It's very actually. Ethos is designed based off the Moo IUL. So it's also simple in my opinion. There's a couple of options there with Moo. So if you appointed with Moo, go ahead and present your client with a Moo IUL. FNG is also they have a very strong platform. What else? National Life. Yes, I'm a little bit biased with National because I've been riding with them for 8 years or so now. It's a very simple platform. Everything is in one place. I always tell the agents that the platform that National Life has it's almost like a DJ turntable. You have all these 1,000 knobs, right? And each knob can do one thing. And the more knobs you learn, the more effective you'll become. Do you have to know what all the knobs do? No. 5 knobs, that's it, done. But as you become more and more familiar with IULs, then you have it at your fingertips. Yeah, with that, which product is better than the other? Well, there's different types of IUL, and the way I focus on presenting it to a client, I'm careful with the words that I'm saying, because 99% of the time you're sitting in front of someone that does not have your license. So Index Universal Life, the client is thinking, what is that? You already made them feel uncomfortable. So I sell an IUL without saying Index Universal Life, without saying cash value. Basically, I'll take out all the complicated words that we are familiar with as agents, and I present my IUL to my clients.
Break that down for that. That's interesting. So you're not saying IUL, Index Universal Life. You're not saying cash value.
No.
That's interesting to me. Mm-hmm. So if I was your client, how would you present it? How would you present that to me without saying those catchphrases?
Okay, well, real quick, I mean, we can go into it. Let's say, for example, I'll pick up if that's the important part for the client, then I'll go down that channel. The client is always going to tell you what their favor or what's on their mind. So if you're talking to me about, you have, 100,000 in your bank account, right? So now I know that's where I need to go. So my question right after that is, how's that performing for you in your bank, your traditional bank? And of course, the answer is, not so well.
Yeah, right.
But at least you have it there, right? Awesome. Most of my clients that have money in the bank, they always tell me they're hovering around 1%, give or take, sometimes a little bit more, but for the most part, is less than 1% return. Yeah, that's about right. That's the answer that I get back. Awesome. How would you feel making more than 1%? And the client is sitting this way, suddenly you can see the body language. What do you mean?
Tell me more.
Tell
Right.
me more. Well, the clients that I'm sitting with, I'm actually offering them the what we call the supercharged savings account. How does that work? Well, they're able to actually position themselves so they can get at least 12, 15%. 12, 15%. Well, how? Well, it's actually something that the wealthy are doing. They use the different savings account that most people are using. So by using these savings accounts, they're able to supercharge their nest egg, their savings, their retirement fund. Really? Yes. And if you even want to make it better or sweeter and not having to ever pay taxes, all you have to do is attach that savings account with a life insurance. Now you're protecting your growth because most investments, as you know, you have to pay capital gains tax, right? Yeah, I know. Well, here you can avoid that and simply comply with the IRS codes. I know you probably haven't heard of it, but it's called 7702. But this is just codes that IRS has in place for all of us to take advantage of. And the wealthy, they're using these supercharged savings accounts and they're simply attaching a life insurance so it won't be affected. Does that make sense?
Yeah.
No.
Well, that's awesome. So that's definitely for a client that's an easy way because I think, Yanni, correct me if I'm wrong, but I think that the majority of agents, when they have a client that has $100,000 in the bank account, especially when we're new and we don't have probably $100,000 in our own account, we feel that that person that we're not qualified to talk to that person, and so they're a little intimidated by that, right? But you just broke that down where you can explain it regardless of what's in your bank account to someone that has more than you that they can understand in its most simplistic of forms, right? I love that. Supercharged savings account. That's awesome. Now, how would you approach it? Because the majority of the people that we talk to don't have 100,000, right? They're middle America. That's our target audience, right? And so maybe they need some life insurance. Maybe it's a mortgage protection lead or something like that. And they have, say, a $300,000 or more mortgage. Maybe they're putting some money into 401k, but they don't have a lot, right? But they're concerned about retirement. Maybe they're in their 50s, maybe they're in their 40s, but they're just starting out. How would you approach it with them? The same amount, the same way? Or, like if I'm concerned about, just $300,000 worth of insurance and maybe a little bit of retirement money, how would you approach that client?
Yeah, it's always case by case.
Yeah.
And again, it's very important to listen to what the client's needs are right up front. So with this case, for example, I could use the provisional income approach. And there's not a question that I ask my clients that I don't already know the answer to. So the provisional income, many new agents, of course, haven't heard that before. I actually had a call the other day. I briefly touched on it. Provisional income is, something that we all need to know as insurance agents. And for some of you that are already Googling it right now, you can see what that translates to. But again, our job is to simplify the message, right? Mm-hmm. So having a conversation with this type of client that you just mentioned, I would use the provisional income in this way. So let me ask you, are you planning on paying taxes when you retire, or do you want to stop paying taxes at retirement? The answer.
Repeat that. That's golden.
Are you planning on paying taxes after you retire, or do you want to stop paying taxes when you retire?
Stop. I want to stop, Yanic.
That's the answer most of my clients give me.
You
Now,
know the answer to
of course,
that.
yeah.
Golden. Okay.
So I proceed by telling them most of my clients do not want to pay any more income tax after they retire. And I would assume you're in the same boat. And then, of course, is the answer 100% of the time. Then I proceed telling them the same story I always tell. I have two individuals that live in the same block. They're both 65, just retired. One pay taxes and one doesn't. Do you know why? Because of provisional income. And I purposely throw that word in there to confuse them. When you confuse a person for a short period of time, you have an opportunity to really get their attention. It's not good to do that all the time for a long period of time, but one word. So provisional income, what is that? I'm sure you guys are familiar with provisional income. And for the most part, I don't wait for an answer because you don't want them to feel stupid, especially if it's husband and wife sitting in front of you. You want to continue with that. I'm sure you are familiar with provisional income. Provisional income is a law or guideline set by the IRS, basically saying if you're single, you can only make so much money at retirement. If you surpass that limit, that threshold, then you're going to be taxed. And if you're married, that threshold is a little bit higher. Now, this limit is going to be, imagine a bucket being filled with water, right? You have your Social Security cup that you're going to pour into this bucket. You have your 401k cup that you're going to be pouring into this bucket. You have IRA cup that you're going to be pouring into this bucket. All of that's going to raise that threshold limit. So have you thought of how much money you have on these qualified accounts? Because if you surpass that provisional income, that guideline set by the IRS, you are going to be taxed at retirement. And the only way that you can get away with, not getting taxed if you actually utilize certain products that the IRS would not count towards your provisional income, towards your threshold. And those two products are Roth IRAs and life insurance. Now, what type of life insurance do you currently have? Oh, I have this whole life, this final expense, this term, but do you have the supercharged life insurance accounts? No, what is that? Back to IUL.
Boom. Mm-hmm. Yeah, that would definitely grab my attention. Right? So again, the key phrase here is, do you want to continue paying taxes in retirement or do you want to stop? Right? They're going to say stop. Yes. And then you roll right into what's the transitional phrase that you're using to get into the story about the two people that are 65 years old, both entered into retirement, one is paying taxes and one is not. How do you transition into telling that story?
Because like we all know, story sells, right?
Absolutely.
And it gets people's attention. So I'm watching the individual in front of me, how they're reacting. Are they absorbing this? Is this making sense? If I see any hesitation, that's when I bring in that story. Sometimes I don't bring in the story because it already made sense. So that's just a reinforcer for me. Okay. I add that in there. So now we're talking about, getting them to understand that you can either pay taxes at retirement or not. And if that makes sense, it usually comes in form of a question from the client. Well, what do you mean? How's that possible? Then I have the option of throwing in the story or going into an explanation without the story. Mm-hmm. And again, I'm constantly watching my clients. Are they absorbing what I'm saying?
Got it. Now, how are you doing that on the phone? You can't see them.
Well, yeah, from you can hear people's voices. If there's an awkward pause or a sound, you can hear. But for the most part, I want to transition those calls into a Zoom, because the most effective way of selling is always going to be face to face in person. But we are obviously transitioning from that to telesales and Zooms. So I still like the Zoom portion. Does it always work? No. Meaning, do I always get the opportunity to sell via Zoom? No. Sometimes you have to do the call on the phone,
Right.
which I don't like to do very much, because you're going to limit yourself as far as how much of an investment you're going to get from that client. So it's not going to be possible for me to get a $10,000 a month premium from a client over the phone. It's no, they want to see who they're giving that $10,000 to. So,
Right.
but can you do it? Yes. An ethos can be done. $100, $200, it can be done over the phone. It's, for the most part, there's not a lot of resistance there.
No, there's not. And as long as it makes, sense for the client, you can still get the $400, $500, $600 over the phone.
Yes.
You know,
Yes. Yes.
as long as you present yourself confidently. And speaking of confidence, I don't want to get, because we could definitely get deep into the woods with you, man. You're wicked smart. As they say in Boston, wicked smart. Right. And so, but I do want to try and keep it, on simplistic level. Sorry, my dog's barking. For the newer folks, right? As far as breaking into IULs, right?
Yeah.
Like, what's a good way to describe what an index universal life is so that they can understand it in order to go ahead and convey that to the client with confidence?
That's a very good question. So what is an index universal life? And this is going to be obviously for you guys agents. The more you know what entails when it comes to an IUL, the easier it's going to be for you to bring out the necessary ammunition at each conversation that you're going to have. So what does an IUL do? What's the purpose of an IUL? If you guys know the story of insurance, I don't need to go too far back, but let's simplify that. How many types of insurance are there? 3. You have your old traditional whole life, you have your term life, and you have your universal life. These are the main top insurance platforms. And of course, there's subcategories under each and every one. So as a new agent, you have to know this. 3 insurance types. Now, we're going to focus on the universal life. On the universal life insurance, as it came out as the number one, product, we call it the Swiss Army knife of insurance. Why? Because it was a blend of a lot of things that we hadn't seen before. So you got a little bit of term, you got a little bit of whole life, you got a little bit of everything in there. You have flexibility inside of a universal life. As it came out many, many years ago, it kept getting tweaked. And by tweaking, they started to get subcategories of a universal life policy. We got introduced to the GUL, Guaranteed Universal Life. And then we got introduced to the VUL, the Variable Universal Life. And then finally, we got introduced to the IUL, the Index Universal Life. So we have realized, as evolution has gone through times, IUL is pretty much one of the top categories that we have with universal policies. So what is an IUL? It's a permanent policy, depending on who you speak with. Some will tell you that IUL is a term policy that keeps renewing every year, right? I don't want to confuse too many people, but it's a permanent policy. Keep it simple. It after a year, it's not going to go away, right? It's going to be there all the way, depending on the carrier you use, all the way to 120 years if you structure it properly, right? So depending again what carrier you're using. So IUL is a mix of several components. It's flexible. You can start with one premium. You can increase the premium. You can decrease the premium. If you lose your job as a client or whoever has that policy, you sometimes can go months without having to pay a premium and then pick it up again. Flexibility, right? Let's say you start a year with the IUL and then later on you realize, oh, I have too much coverage. I don't need that much. You can reduce your coverage. Or what if you started with not enough coverage? Well, you can increase your coverage. So much flexibility inside of an IUL. Now, what does the IUL do in the front end? It covers the client with a tax-free benefit, right? And then we have obviously the living benefits that comes attached with the policy that can, give the client a peace of mind. I normally use my my little circle here of puzzles when I speak to a client, right? We're going to make sure that if you die too soon, you're going to be protected. We know that most people, when they get older, they get sick and then they die. Well, we want to make sure that if you become ill, you're going to be protected. So this is what we're doing for you, Mr. or Mrs. Client. And then obviously what we're trying to accomplish and make sure that happens is that you live here for as long as you can, 120 years, if so, be it. And that's when we put the final piece together. If you live too long, you're going to have your nest egg that you so deserve. So IUL has so many intricate parts to it that it's hard to ignore. It depends on what section that you want to talk about with that client, because the living benefit might be the most important thing for the client, or sometimes the face value might be the most important thing, or sometimes it's the cash value, or in some cases all of it, right? Mm-hmm. So we have to learn to listen to what the client's needs are so we can hone into that particular section of an IUL and deliver the product.
Right. That's awesome, dude. And for those that don't know, that little puzzle piece, you could actually go ahead and take a picture of an NLG presentation and text it to the client, because they have those puzzle pieces right there, right? I do it all the time with NLG, and people are like, oh, it's so simple, right? It's awesome, but it's a powerful presentation. I've never seen anybody with the actual jigsaw puzzles. That's awesome. I love that, dude. So I can see where that would work extremely well. Like John was saying, that's a powerful presentation. So basically, Yanic, with, and just keeping it so super simple, right? Like, so basically the IUL is a combination. You have whole, term, and then the index universal life. And the index universal life is a hybrid. It's got the best of a whole life and the best of a term. Boom. And it's a hybrid policy, right? And so it's got the best of the best, right? As a takeaway, I always like to say, now, Yanic, I'm sure this makes a lot of sense to you, but this is the hardest policy to actually qualify for. Mm-hmm. And I take it away from them, right? Because people want what they can't have. They're like, oh, now you got them on the hook, right? And so then, it's going to build cash value. It's got the living benefits. It's going to have the associated death benefit. And one of the things that I think people get confused on, right, is, especially when we're new, is we've got two phases, right? You have what they call a level, and then you have an increasing, mm-hmm. right? Real quick, can you describe the difference between level and increasing, and when the appropriate time to do that is for each, say a younger client or an older client?
Okay. Obviously, this is a question that comes from a professional like yourself that's involved with IUL, so you know exactly the difference between level and increasing. Everyone here, guys, this is a very important question by Shannon. So pay attention to this one. You can set up an IUL wrong for a client to the point that they will lose their policy. So it's so important to know that there's a level option and there's an increasing option. Let's focus on the level option. So the level option is when you set it as simple as possible. You have the face value at 100,000. That 100,000 is going to stay 100,000 for the permanent life of the policy. So comparing that to the increasing value, the 100,000 that you're starting with the client as the face amount, this 100,000 is going to grow with time. How does it grow? You may ask. It grows because we are allowing the cash value for agents, savings for clients. We're allowing the savings to be added to the face value. So the face value is growing. So back to what I said in the beginning, you can set up the policy that it can cancel itself out. If you set up the policy increasing, you taking the savings account and you adding to the face value, what are you doing? You increasing the amount of insurance coverage. So you set the client up for $100 premium a month, and this $100 is not changing, but the face value is. So we know if the face value is increasing, what else is increasing? The cost. So if the cost is increasing and you're only keeping the $100 going in a month, eventually you're going to run off the cliff. So it's important to understand that that could happen. Now, I'm not saying that you shouldn't set the increasing mode on. There's case by case that you have to know which one to do. For the most part, you're going to set it as level. Sometimes you can blend it. You can say, I want to start this client with increasing because it makes more sense. But after X amount of years, I want it to flip over into level. You can do that. I wouldn't see a reason to start at level and then flip it to increasing. That doesn't make too much sense, but it will be increasing flip to level. And again, this comes with practice and time and, going over it over and over again, and then you finally will make sense of it. But yeah, hopefully that explains it.
Yeah, that's it's a great point. One of the things that that was taught to me early on, and it just made a lot of sense, right? As I always say, Mr. Client, one of the things, these are great policies, and it can be a permanent policy. It'll be if it's set up properly. The mistake is most agents don't know how to properly set this up. And so then you're immediately differentiating yourself as a professional that you realize the difference. And then you say, hey, by the way, if it's not funded properly, you've got the cost of insurance. And we're building this cash value. And if you're only staying with, in your example of $100 per month, Yanic, at some point in time, the cost of insurance is for the insurance company is going to be more than what you're currently paying. And so your cash value caps out. It's going to top off. You're at the top of the mountain. And then, so what they're going to do to go ahead and keep the payment the same is take away from that cash value. And eventually it's just going to run out and you no longer have a policy. And you want to avoid that, right? And then they're like, yeah, I want it to last. And so then if you understand that, you just set it up as a level to ensure that it won't run out. We're going to be okay. But if you explain it kind of like that, also it's another perspective for the client to take a look at. But for not necessarily, you don't have to explain it like that to the client. But if you understand it yourself, then it becomes much easier. So would you suggest just when you're new, number one, understand the difference, but to go ahead and set it as level?
Yes, that's a good. By the way, I really love the way you say it. That's so professional. It's easy to grasp. But
Thank you.
if you are a new agent, set it as level so you don't have issues, because there's so many stories that I can tell you. I mean, for example, 2017, it was one of the carriers that we use got sued for almost $200 million because multiple clients was complaining that they lost their policies after many years, and that you don't have time to recover. So if you're a new agent, keep it at level. But hold on, Yanic. Now my savings is growing and my face value is not. What happens if I die in 10 years and my savings is at $50,000? What happens to that 50,000? Your beneficiary is not going to get it. But what happens to it? Who gets it? Hello? It's in the policy. Where do you think it's going? It's going back to that carrier or stays with that carrier. But I don't want that. I want my beneficiary to get that 50,000 added to the 100. Well, that's when we have to set it as increasing. But there's a risk with that. So there's so many tweaks and conversations that needs to be had. But in the beginning, keep it simple. This is something that you can change. Let's say you put the client at level starting, and then a year or two later, you find out more about these IUL products. You can go back and change that for the client and make it increasing. So there's nothing that you can't change.
There you go. Now, Sue just made a great point, because we're quickly running out of time. I would highly suggest that you go on and register for the boot camp for the IULs and annuities, right? And further your education, because Yanic has described this in such a manner that, like, if you're not interested in IULs, man, you ain't paying attention. I'm sorry. Now, because it's best for the client, it's best for the agent, right? And one of the things that you want to make sure, when you do it, we're looking at target. Let's say someone's overfunding, right? And you got somebody that's $1,000 a month, that's 12,000 AP, right? That's awesome, right? You're not paid on 12,000 AP, are you, Yanni?
No.
Yeah. You're paid on what they call target, right? Yeah. So understand that. We see a lot of, we're seeing some incredible numbers on the leaderboards now. $300,000 in a week I just saw. What? That was nuts. And I'd like to find out what they did, right? That's either $3 million annuity or a couple huge IULs, right? And so while these numbers are impressive, we are paid on the target premium. I think that's important to understand as well. We're kind of, we're getting close to the top of the hour, Yanic. Thank you so much, man. Like, we could really get into the weeds with this, but I know that you've definitely piqued a lot of curiosity within some folks that want to get into the IUL space. You've taught me, some things today as well, and how you're approaching your presentation. I can't wait to see you in conference. I'm going to pick your brain some more, man, if you don't mind.
Likewise.
Yeah, not a problem, man. Not a problem. Collaboration is always great. Now, one of the things that, if you could give a parting shot, 2 or 3, things about the IULs for the new and for the veteran agents that are getting into this space. And how has it, affected, number one, let's start with, how has it affected your lifestyle? Number one, because there is that part of, this business. We love helping families, but, there's a financial reward side of this thing. How has that helped your family? And then just, give some words of encouragement, a couple of pointers for the agents to go ahead and get into this space.
Yeah. Like I mentioned in the beginning of our meeting, my first 5 years was whole life, right? So if we look at, we have 24 hours in a day. We all do, right? So if you have the choice of dealing with a client that's going to get a product that we have, of $100 and another client that's going to get a product of $1,000, one is not better than the other one as far as client goes. They both need to be served. But when I realized that I could focus on this group of people that has the means of paying $1,000 a month, it would allow me to spend more time with my family. It was a no-brainer. So I can do the same amount of hours a week, but being in a completely different financial bracket and spend more time with my kids and my wife, more quality time. It's just, but sometimes I have agents asking me, which one's best, term, whole life, or IUL? None of them are best. They're all good. It depends on who the client is. It's like me saying size 9 is going to fit everybody. No, everybody has a different shoe size. I can't put a size 8 in a person that's, a size 10 shoe. It's not going to work. So figure out your client and serve them. Sometimes I'm sitting with a client and we have to pivot back to a term or to a final expense. That's what we do. But I purposely position myself intentionally to deal with these demographic of clients because it saves time. It just does. And going from the final expense, the term, seeing my lifestyle to being an advanced market side, it's night and day. It's less headaches, less we know chargebacks, persistency is through the roof, which involves your residual. I look at my residual; it's fun to see, because the clients are still on the books. A client is less likely to cancel a policy that they're paying for, $500,000 or more a month versus that $50 or $30 or $40 client. If they decide not to pay it after a couple of months, it's not going to hurt them that much, right? But pick your battles is what I have to say. Pick your battles. That's all it is.
As far as for me, which one's best? Whole life, term, index universal life, whichever one the client qualifies for. That's the best one. There you go, and one that they can comfortably afford. 100%. And the other thing, sorry, my dog is Thor.
I love dogs.
He wants to get in on the action. Thor's the rock star. But not everybody's able to start with indexed universal life. This is an education. So if we differentiate ourselves like Yanic and we approach it in an educational format where we can go ahead and explain it to folks, the differences, maybe they know, maybe they don't, right? And so that this way, when we present the choices with the index universal life, if they qualify, and they're like, well, right now, man, I just can't afford that. It's okay. Because the important thing is that we get them the coverage. And then you say, well, what I would suggest, Yanic, is to go ahead and go back down into the term. Let's go ahead and get your family the needed protection, which will give you peace of mind, knowing, God forbid, if anything happened to you, Yanic, that your family is taken care of in the short term. And be the professional and let them know, hey, in 6 months, 9 months, 12 months, you let me know when you want me to follow up with you. At that point in time, we'll see how you're looking. And we can go ahead and get you involved, with the index universal life policy at that point. Does that make sense? And then they're like, yeah, you just took the pressure off of them. You presented it in a manner that's professional and you got it back down into the budget. There's no sense in really doing an index universal life for 50 or $100 a month, right? When we can go ahead for the same money, get the client a term policy, give them increased coverage with living benefits. Would you say that's a fair assessment, Yanic?
Yes, absolutely.
There you go. That would be better for the client because, yeah, we want to learn the index universal life, but there's no sense pounding our chest on a $50 or $100 policy for IULs, right? Let's go ahead and get the client more coverage. Yanic, man, I could go on and on and on and on with you. I definitely want to have you on again because there's so much more to unpack, and there's the infinite banking side of things. But look, like one of the things I always say is when I went into the car business, I didn't walk through those revolving doors earning $100,000, right? But I walked out and I traded that 6-figure income for a potential 7-figure income in insurance. This is going to be a process in your career, just like mine was 5 years ago. Final expense, mortgage protection, term, IULs, right? Everything else. We're not going to be able to learn everything all at once. We can have a game plan, but start by being a professional, learning, logging into the boot camp and educating yourself and taking your shots. Don't be afraid to take that shot because you're going to miss 100% of the shots if you don't step up to the plate and take a swing. Right? Yanic, thanks again so much, man. I appreciate you more than you know. You're crushing it. God bless you, dude. Thank you, everyone that got on to the Empower Hour this morning. Kudos to everybody taking your time out on a Saturday to go ahead and hone in on your craft. You're the ultimate quintessential professionals. Thank you so much. I look forward to next week. Next week is going to be an amazing one. We will go ahead and drop that. And Sue?
Mike Hamadi.
Mr. Mike Hamadi. Right, I think he's going to be Rookie of the Year. 1 million, right?
Nice.
1,000 families, I should say. So it's going to be another one. Get ready for that one. But again, Yanic, thank you so much. Thank you, everybody. Go crush the day.
Thank you.
Thank you so much, Yanic.
Hey, everybody, drop a 10 if you think Yanic did a great job, because I know we're going to have a bunch of 10s. Thank you so much, man. Appreciate you.